Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Billionaire Jared Isaacman is set to be in talks with Trump over that top NASA job. You might remember he was nominated to be the head of NASA, but that nomination was pulled. Ed Ludlow from Bloomberg Tech has the exclusive. He joins us on site here at a Bloomberg Screen Time. This was really surprising to me.
It was a surprise. What we know from sources is that Jared Isaacman in recent weeks has been meeting with the president and other government officials, and that the discussion has centered around a pathway for Jared Isaacman to be re-nominated to lead NASA. You'll remember he had been nominated, but the administration cancelled or terminated that nomination in May. At the time, the president and the White House talked about how it was his historic ties to the Democratic Party that were behind it. But you'll remember we reported quite deeply that actually it had something to do with Jared's association with Elon Musk at a time when Musk had a fractious relationship with the White House. So this is ongoing. You know, we know from a White House official the president's made no decision. He's thinking about it. It could change, but they are talking, and my understanding is they'll continue to talk.
Before we got going, I think we were all thinking, wait, is this also, though, something bigger, broader in that Elon repairing his relationship with the White House, or is this Jared repairing whatever went on before?
Do you guys remember I came on the show a few weeks ago when the president hosted that dinner with different technology CEOs? Jared Isaacman was present. And Tim, you asked me, was it Isaacman who was there as Elon Musk's proxy, as had been reported in some of the media? Apparently somebody there was there on Elon's behalf. My understanding is no. Jared Isaacman was not there at that dinner as Elon Musk's proxy. He was there of his own accord. For whatever reason, the president invited him. But this is very recent. What's happening right now, the meetings between Jared Isaacman and the president of the United States, they're ongoing. He's meeting with other government officials. And right now, Sean Duffy, the transport secretary, is a temporary leader of NASA. But at the time when the nomination was canceled, like loads of people across industry and government, you know, held Jared Isaacman in very high regard as somebody very qualified to lead the agency.
Let's talk a little bit about that, because there has been criticism, oftentimes coming from the Democratic Party, about many of the president's picks for his cabinet. People who the Democrats argue, and also people sometimes in positions of science or academia argue are not appropriate picks. It wasn't so with Jared Isaacman.
I don't cover politics. I don't cover the White House. I know that I try my best to break these stories, but the thing about Jared Isaacman is that he was a private citizen astronaut, right? He'd been to space more than once in projects with SpaceX that he'd funded himself. In the nomination process for the initial nomination, he had recused himself of his ties to SpaceX and sold out of any financial conflicts, as is normal in that case. But people basically said he gets the technology, he knows the players in industry, he is not a legacy politician, he is a successful entrepreneur. That was the direction that the space industry was going. There was some debate about, well, is Jared Isaacman's philosophy aligned with the president's and NASA's, in that are we going to the moon or are we going to Mars as Elon Musk wants to? But basically he was seen as highly competent. That's the point. Yeah,
it's interesting, and it's an idea of it. Is this the right person for the job? And it sounds like that it could potentially go back to that. Hey, just before you go, we're here at Screen Time. Yeah. You're doing a discussion here. Tell us kind of your impressions.
Yeah, I think right now there's a lot of movement in this industry. So I expected to come and talk just about AI. Actually, I think we look a lot deeper at the economics of media and entertainment. That's what I get from the Ellison conversation that's just happened. My panel, selfishly, is with the Twitch CEO, Dan Clancy, and then Pokimane, one of the most followed streamers on the planet. And she's so interesting because she's making a lot of money in a lot of different ways by going live on Twitch, but also posting to Instagram and YouTube. And the economics of being a content creator are fascinating. Isn't that the point of Screen Time? Learning about the money behind all the things that keep us glued to the screen.
Yes. Look, how many screens do we have here right now? Ed Ludlow, congratulations.
Thanks, guys.
A Bloomberg exclusive. Highly recommend everybody check out the full write through. It's on the Bloomberg and at Bloomberg.com. Ed Ludlow, co-host of BTech right here on Bloomberg TV. Ed, thank you so much.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's get to it. With us is Samira Bakhtiar. She is General Manager of Media, Entertainment, Games, and Sports Industry at AWS, Amazon Web Services. You know, we think of AWS and we think about Amazon as a hyperscaler, the cloud and stuff, but there is so much more. And getting to know what you do, I mean, you're constantly talking with folks in gaming, sports, video. They're trying to engage with the consumer on all different levels.
Yeah, there's so much happening, and I appreciate you laying out those stats and then also watching that presentation on NAB. I very much appreciate that. I think, let me start with, fundamentally, the cloud has become the backbone of media distribution globally. Without the cloud, it would be impossible for consumers to gain access to streaming services. If you're streaming this right now as an example, these types of services become fundamental for global reach. The cloud also is critical relative to content creation, as well as the ability to create different types of audience engagement motions that can be monetized by organizations around the world. And so to those stats that you just described, at AWS, we have the privilege of working with everyone from content creative studios to global streamers to broadcasters to game developers and game distributors. And it's been an honor to be able to work with them across this motion. One of the things I'm most proud of is that over 1 billion people right now are receiving their streaming content based off of the AWS services that we provide.
It's a lot.
And to your point about games, 750 million people are playing games every single month based off of those same services. And we're not just talking about AAA games like Fortnite, but casual gaming as well, like Candy Crush or Wordle from the New York Times. By the way, again, all great AWS customers.
I play Wordle.
You do play Wordle. I know that about you. And I'm guessing you have a text string of like people you compare Wordle scores with, right?
Maybe.
Many of your siblings.
Yes, indeed.
This I know about you, Carol. I want to talk a little bit about some big customers. Netflix, for example, is a huge customer. When you look at areas of growth across AWS and, kind of overlay that with consumer behavior, where is the biggest area of growth right now in terms of what people are demanding?
Yeah, so two things. One is I thought Greg Peters did a wonderful job last night during the Bloomberg Screen Time presentation. I really loved how he talked about Netflix being a build versus buy culture.
Yeah, he's co-CEO of Netflix, for anyone who missed that.
Yeah, thank you. And so it's very important that we ground ourselves on that too, because at AWS, we want to be able to provide the building blocks or the primitives to allow for anyone to be able to build anything that they could imagine. And Netflix has really leaned into that very technical organization. We're delighted to be able to partner with them for so many years. And then to your second question about like, what are we seeing? Fundamentally, I'm hearing three things from customers all around the world that they want. The first is they want to be able to create more content, high fidelity content at a lower price point, much faster than ever before. And this includes live content like the ones you're watching right now, to episodic content, to theatrical content, to animated content, you name it. They want to do it faster, cheaper, and better. The second is that they want to really cultivate multi-channel monetization opportunities. So this means being able to go beyond an ad impression, but really look at being able to monetize against a 360-degree perspective of how their IP shows up across different mediums. And then finally, everyone's hyper-focused on next generation of fan engagement. How can you really enhance the experience so that you don't just retain subscribers, right? But you have people coming back for more and more. And I think the through line underneath all of that is the availability of generative AI and what that can help do to help to really augment our capabilities and accelerate innovation, but then also just make us so much more productive.
One of the things I thought, because I thought about your world and all the things, whether it's media, entertainment, games, sports, which thing is kind of driving demand at AWS? I'm just curious because we keep hearing so much about gaming, everyone getting into gaming.
Well, we're going to talk a lot about gaming over the next 3 hours on our program.
Yeah,
so
exactly.
It's a big theme here.
Yeah. Well, look, we have customers across all of those sub-industries. Let's start with what's going on in the industry. PwC released a study recently saying that by 2029, the entertainment industry is going to be worth $3.5 trillion. That's up from $2.9 trillion last year. So like an ad of $600 billion worth of opportunity out there. And I think that if you work backwards again from those generational preferences that we're seeing, like you talked about Gen Alpha, Gen Z's propensity for games, for social, for user-generated content, for music, for audio, this really signals to more traditional established entertainment brands that it's no longer sufficient for them to be good at one type of medium anymore. They really need to diversify. They need to create much more interactive and immersive experiences. And so we're seeing this convergence of the tech come together to be able to allow for new product propositions to come to market faster than ever before. And one of the things that I'm very interested in is what that type of pressure is going to do amongst startups versus that more established legacy brand. And now you had mentioned gaming. Like I think that some of the incredible convergence that we're seeing across game tech. If you look at what Epic did last year with Fortnite and the concert that they had with Snoop Dogg, I know you had Snoop Dogg on this program last year, but they did an incredible job. They did a live concert. Snoop Dogg was there. It was in the game. They were able to attract millions in-game, millions more across digital platforms, and they had thousands show up in Times Square. But then Roblox is also doing the same thing. And I was just upstairs with Eunice from Scopely.
She's going to be on a little later with us.
Oh, tell her I say hi. Great AWS customer. But you look at what they've been doing with Pokemon Go, that again speaks to that convergence, because you want to meet consumers wherever they are across all demographics.
So just to follow up then, so is it gaming where you see the most growth, where you mean like traditional media, if you will, that's where they want to go? Or is it all of it? You know, we mentioned sports has also been an explosion. You guys have done a lot with F1. So I'm just trying
NBA.
Is it all growing kind of at the same levels, or is it one thing, sports over gaming, or something that's
absolutely
really leading the way?
So I think the question comes down to, like, where is the engagement the best? Definitely live sports has an engagement factor that's unlike other types of traditional mediums. Again, that's why we work really closely with Formula One, the PGA Tour, the NBA. Actually, just last week we announced a strategic relationship with the NBA. We're now their official cloud and cloud AI partner, because we're going to be able to launch something called NBA Inside the Game, powered by AWS, where we're going to be able to create a platform to ingest billions of data points from these games in order to create a more interactive and insightful gaming sports viewing experience, like really get you behind the game. So that's one element of it. But then I think you also can extend it to the engagement that occurs across, again, traditional gaming, but then there's also betting in gaming as well.
Yeah.
So to follow up on that, on the live sports part of this, early in my career, I remember covering the Yahoo NFL game that was broadcast. This was hard to believe 10 years ago at this point, and there was so much attention on this because it was like the first streamed NFL game. A tech company was doing it. Now this is table stakes.
Absolutely.
Especially when it comes to AWS.
Right.
What goes into producing something live versus delivering content that's already recorded? Is it much more processing? Is it much more pressure? What is it?
Yeah. How technical can I get here?
You can get technical.
I was also going to say, like, what takes... There's a whole bunch of people behind here, what it takes to put this together live, and it's tricky.
Incredible.
And we are wearing these like the football announcers.
I know. I actually feel like we're commentating a live event here. So look, a lot goes into it, right? So I think fundamentally there's elements that are similar, right, with like the distribution of the technology, especially associated to streaming. But there's quite a bit that goes into the production of content. You need to be able to ingest live feeds. You need to transcode those feeds. You need to package those feeds, and all of those have historically been done through more legacy technology stacks that have had to reside on-prem. Actually, just last month, we announced the 10-year anniversary of our AWS Elemental Media Services. These are purpose-built services for broadcast and production, and they allow for us to do all those things that I just described that have historically been on-prem. You could do them in the cloud. And customers are adopting them at scale. We work really closely with customers like Fox, the BBC, NBC Universal, just to name a few.
And when you say on-prem, you mean on-premise. It's the idea of actually having this equipment with you at a certain location versus having it in the cloud.
Yeah, absolutely. Because I think to your point about the transition, well, why would you want to do that? You would want to do that because there's sustainability benefits associated to it. There's cost benefits associated to it. And then if you're in a position where you have to actually roll out less physical infrastructure, it allows for you to create more content, more shows. What would be preventing you if you had infinite resources from being able to cover more events like this around the world simultaneously? That's what the cloud really provides.
I am curious about the AWS stack.
Stay with us. More from Bloomberg Businessweek Daily coming up
is we
after
talk
this.
about generative AI, large language models, every industry, finance, healthcare, you name it, that are tapping into it. So we think about Amazon on that level. But then I'm hearing about all the stuff that you are doing specifically with specific clients, and it sounds like that's another in the pecking order. So talk to us about that stack.
Yeah, absolutely. So I'm hyper-focused on serving the media, entertainment, games, and sports industry. Everything my team and I do is really grounded around taking the AWS services that exist. There's over 200 that have numerous features, and making sure that we have a subset that are very purpose-built for the needs of entertainment customers. And then we're also focused on ensuring that we can help advance the industry associated to it. So as an example, we're active participants in the Society of Motion Picture and Television Engineers. We actively engage with C2PA, which is focused on provenance. We actively engage with Movie Labs, which is really focused on this vision by 2030 of being able to create entire pieces of theatrical film in the cloud. And we're the only technology provider that's been able to satisfy 5 of the 10 different principles that they're aiming to go after. So I share that with you because I think when you look at AWS, we are the world's most comprehensive and most broadly adopted cloud, and we have 200 services that can be used to invent almost anything. My job, my team's job, is really to make sure that we bring that subject matter expertise to bear to be able to ensure that the outcomes that matter most to our entertainment customers can be realized, and that we're able to bring the industry along with us.
A lot. I know we're going to continue this conversation in the future. So great to get some time with you here.
Thank you. It was a pleasure to meet both of you.
Same here. So appreciate it. Samira Bakhtiar, she is General Manager of Media, Entertainment, Games, and Sports Industry over at AWS Amazon Web Services.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Carol Massar, Tim Stanovec live here at Bloomberg Screen Time. We are in Los Angeles. There are several names in media, entertainment, internet spaces that you've got to listen to, and that includes our next guest. Laura Martin, Senior Analyst at Needham & Company, joins us. She covers media, entertainment, internet spaces. Usually we are talking to her remotely, but we came to her home. So delighted to have you here with us. When you come to an event like this, and I'm sure you go to a lot of conferences and so on, what is it that you're looking out for?
You know, what's great about Bloomberg Screen Time is you have everybody that's important in media, both old media and new media, which a lot of conferences miss either one silo or the other, and they are converging, and therefore their competitive statements are relevant to both sides of the business.
Who's making this convergence the best?
Amazon. I think Amazon and YouTube. I think if you think about Wall Street.
Which is interesting because they're both like new media first, right?
Yep.
They're not incumbents.
Yeah, no,
Maybe
they're
now
not.
They could be, but no, not.
And I think sometimes incumbents ignore them, and I think Wall Street doesn't think that's actually the smartest move.
There was an interesting comment in the Jimmy Kimmel conversation last night about how Jimmy Kimmel looks at YouTube and if he's changed his show as a result of YouTube. And he said, I haven't ever changed my show for YouTube, but I do like to wake up and see that a few million people have watched it. But he did say ABC doesn't make money from YouTube. YouTube is the one who makes the money.
I don't know. I know YouTubers who are sailing around the world and they're making millions of dollars a year. Sounds like a good life to me.
But there's a disintermediation happening right there. So even if he's getting more eyeballs, he's not seeing the revenue.
I think the important point here is we have a funnel. You need to have young people at the top of the funnel to create a TV, let's call it a habit, and not just video games or not just interactivity or not just short form on TikTok. So television has to have top of the funnel. YouTube does that for you. So this notion of money now versus money later, you must have that top of the funnel for young people to come to longer form, high quality programming.
Which makes me think about the interest in Warner Brothers Discovery. On that, Greg Peters of Netflix said, or he was asked about it with Lucas Shaw, if he was interested in Warner Brothers Discovery. He talked about it last night. Let's listen to what he had to say.
There's been some reports around you guys being interested in Warner Brothers Discovery. Is there any truth to that?
I would say this, we come from a deep heritage of being builders rather than buyers. I also think that it's, one should have a reasonable amount of skepticism around big media mergers. They don't have an amazing track record over, the history of time. So, I would say it's our responsibility to evaluate all our options and try.
So you'll have a conversation, but the odds of an offer are pretty low.
Yeah, our job is to figure out what's the best way to grow our business, right? And then we have to think, really carefully, how do we invest, our capital, our time, and our attention? And if that's the best way to do it, great. And if it's not, then we should do something else.
All right. That, of course, Greg Peters over at Netflix talking with Lucas Shaw last night. Warner Brothers, and then there's also David Ellison, that there's been talk that maybe he'll be interested. Is that a good, I don't know, is that a good mix of businesses, Warner Brothers? Is that about going after the younger consumer?
No, it's not. But I would say this, that Netflix continues to try to create IP from scratch. And as we know from the sequelization of the box office, starting with the embedded fandom from 30 years ago, 50 years ago, and then holding on, because it creates value in your old stuff when you create something with that IP in the new, like currently.
Like a Happy Gilmore 2.
Yeah, like that. And if so, I ultimately think he gave a non-answer. He gave a very thoughtful non-answer.
Does that mean that maybe they are interested?
I think ultimately they must buy established IP because it's so risky. Not necessarily Warner Brothers, but they must buy IP that they have library value, that they can then make new and own it.
I did not get that from his answer. I love that you're saying this. My response to hearing that was, okay, he says they're builders, not buyers. They haven't traditionally made big acquisitions.
And they said they'd never do live sports. And they said they'd never do advertising. So, like, non-answers aren't even outright denial. Maybe he'd be more likely to buy to be outright denied.
So who should they buy?
You know, good question. They need something with deep IP. These 50-year-old libraries are far and few between. They didn't buy Paramount, which would have been also a very big, deep library, and it would have been a quarter as expensive. So we'll have to see. But in the end, I do believe Netflix must own deep IP and stop just taking the risk that you're creating something from scratch because maybe it's cheaper.
All right, so let's go to David Ellison of Skydance Paramount, who also was asked about, there's been rumors about that they are getting ready to make a bid on Warner Brothers. What do you think about that combination?
Well, I think the thing about David Ellison so far is he has been really quiet with Wall Street about what these individual tactical moves he's making, how they fit together. So he overpaid for UFC, outbidding Netflix, $7 billion a year, $1 billion a year for 7 years. Waste of money. I think he wasted $1 billion, mostly of his money, but public shareholder money. And now he just bought the Free Press for $150 million. I think it was worth 20. So it destroyed $100 million in the scheme of life, not destroying billions, but totally unclear how these fit together, what the vision is. You know, so the idea of him buying Warner Brothers, like if he isn't articulating a vision, I don't know why public shareholders are paying part of the bill.
So he's not doing a good job.
Not doing a good job.
Why do you think the Free Press was not a good buy?
I think he overpaid. I think Wall Street hates, I think it's unclear you can monetize podcasts. And I think we hate everything that is doesn't have a clear revenue stream associated with it.
He argues that, and he said this during the conversation with Lucas earlier, that he wants to appeal to the 70% of people who identify as right of center and left of center. That's who he wants to bring in, and he thinks that Barry Weiss can help do that. Do you agree?
Well, I mean, looking at her, we'll see today because she just showed up in the CBS boardroom, but she's, I would say, a highly polarized figure. So we'll see how she does and how long she lasts. Not clear.
Do you think the news business is long for being at CBS? Do they keep it?
Yeah, I think they keep it. I think you need live programming, and live programming is sports, which is really expensive, and news, which isn't quite as expensive, and really smart people that have a point of view. They get paid to have a point of view, and they're deep thinkers. So we'll see. I mean, he's trying to he's doing tactical things without communicating an overall vision, and I don't know what that means. Like, I understand niche audiences. I understand if you want to target conservatives or if you want to target liberals. It's a polarized political environment. How do you target both? Like, that doesn't actually feel like a target market. It feels like a mass market. But that is what CBS did before, and it sounds like he thinks he's doing something different. So I'm confused.
Laura, does what is going on at CBS and Skydance and Paramount, does that impact the owners of, I think about the traditional networks of NBC and ABC? Like, how does that deal impact the rest of the media space? Or do you don't, because you don't sound like you respect what he's doing?
Yeah, no, I don't think he's done good work yet, or at least he hasn't communicated. I mean, there is a communication function when you're a public company that I'd give him a B- at doing.
And he says he likes being public.
Yeah, I don't know what that means, but okay, good for him. We're paying part of the bill. The public shareholders are paying part of his bill, so I guess he should. I would say, look, we just wrote a piece saying that ABC, which is Disney, should just shut down ABC because then they become unregulated, and the FCC on the Kimmel thing is getting involved in free speech. So if Disney just shut it down, we think it's a $10 billion write-off, one time only, and now they would be unregulated. Yay, seems like a lot of, Wall Street would add it back. It's a one-time write-off. We think they should just shut it down.
Good for Wall Street, maybe not so good for the conversation?
Voices, competition. It'd be bad for a lot of
Yeah.
things in DC. But I could say the same thing about CBS. Like, now, I think, Larry Ellison Larry the dad has a privileged position with Donald Trump. So no need for him. I mean, Brendan Carr's not going to get in his way because of the friendship with the president.
Yeah.
And the FCC is an executive branch regulatory agency. So he doesn't need to shut it down. But I think broadcasters are irrelevant today.
Not us, though.
No, not you.
Be careful. We like you. Laura Martin, senior analyst at Needham & Company, joining us here at Bloomberg Screen Time. Do not go anywhere.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So we are speaking to the moguls. We're talking to the content creators, celebrities, entrepreneurs during the next phase of pop culture. These are the drivers, Tim. They are doing it all. Having said that, all of this requires a lot of money, capital, and that's where Edward Hamadi comes in. He's Chief Investment Officer of the Steward Trust, which is the family office of the Steward family, the president of the entertainment company Polarity, also involved with Lionforge Entertainment. It's an Academy Award-winning Black-owned animation and live-action studio. He wears a lot of hats, which is why we are really delighted to have him here on set with us.
Welcome to Screen Time. Good to see you. You just wrapped up a conversation where you were talking all about private investment flowing into different parts of entertainment. I mean, we're talking sports, media ventures. Perhaps no bigger example of this in recent weeks than the take-private deal of EA, $55 billion. What does a deal like that signify to you?
Well, it takes a big deal. First of all, a lot of capital concentration is how I would look at it. But overall, that space has a lot of momentum right now, a lot of capital velocity. But that's a big, significant valuation.
I think that's fair to say. Is it too high of a valuation?
I couldn't comment. I haven't seen the deal.
What about valuations in general when it comes to media and entertainment right now? I mean, there's a lot of stuff sloshing around. We're seeing consolidation, folks who want exposure to certain things, folks who want to get rid of exposure to certain things. Talk to us through that.
So what I would say is that we are seeing, I'll call them interesting, but some things are overvalued, in my opinion. If you look at sports right now, the valuations are sky high, and it's crushing the who can be buyers, and that's why they've opened that up to private equity.
Yeah,
I'd say on the media side, it's interesting. And why do I use that? Because it depends on what the formula of the IP is. So there are some things that have big audiences where you can quantify it pretty nicely and say, look, this has real potential. There are other things that have become sort of legacy, stagnant properties, and then you wonder, does this thing, what kind of juice does it really have? Do you have the team that can come in and buy it and give it some new life? So it's going to depend on what the nature of it is. And then obviously, we had David Ellison speaking, and he's been pretty bold in what they're going to do in their space. And there's some really compelling IP plays there and big names that have been around for a while.
What do we need to know? I always think about, Tim and I always think about the Bloomberg audience, investors, the changing trends, the disruptors. David Ellison is a disruptor when it comes to media. What are the focal points that he's doing that you think investors should be taking note of?
I think the tech first component is a big deal. I think that there was room for a lot of new efficiency, especially when you're building in streaming. It's a platform, and all the things he described, it was key for some consolidation. Having too many streaming platforms, that's smart. Also, just having the Oracle backbone makes too much sense for them. So that's a big synergy that they can bring to the table. And the things they're doing from a content acquisition perspective, he talked a lot about the intersection of sports. Anything you can do to bring sports to streaming is like the holy grail. And, UFC is an annual year-round event, whereas most sports have seasons. So he is 100% correct to do that.
As I mentioned, one of the hats you do wear is you're CIO of the Steward Trust. And I'm wondering what your investment strategy is there with regard to media. Is it you also have DNA in private equity. So is it like a private equity approach where you buy it, then you improve operations and hopefully sell it for more? Or is it a permanent capital where you're like just buying and holding and you're taking those cash flows?
So we've done, in building our companies, we look at it with a little bit more patient approach. We're obviously not going to never say, oh, we won't sell this. But fundamentally, this is a family of entrepreneurs who want to build interesting platforms. So our companies like Lionforge and Oni Press are on upward trajectories. We've brought in some outside capital in the case of Lionforge to have more smart money at the table. But fundamentally, we want to, Lionforge's quietly stated mission is to be the next DreamWorks. And so kids and family is a big opportunity. We also look at where we can do intersections with sports because we think that has broad appeal as well, but in IP and doing things like shows and movies.
What do you mean by that? What's the opportunity there?
Because, if you look at, let's pick sport. If you look right now, there's a lot of opportunity in women's sports. You don't necessarily have to own the sports league. Why don't you make shows where you have rights to do things like cover the lives of the athletes? We're seeing it, Wrexham, for example, great show. It's doing really well, and it's rounding out how people view that. Well, if you want to access women's sports, for example, I think there's a more robust story to tell, telling stories about young girls playing volleyball and how do they get prepared. There's a huge audience for, I'll use volleyball as the example, 37 million people are the audience of women's volleyball under 18, between their families, the women who participate, etc., and the people want to watch it. There should be some great stories there to tell about that.
In case anybody doesn't know, women are pretty spectacular, so I'm just going to put it out there. So why not do more stuff?
Again, very entertaining,
amazing.
And it's just an area that hasn't been focused on. We always talk about the big sports, which are robust, high valuations, etc. But there's all these other things that are coming up, and then you have, oh, by the way, every 4 years you have the Olympics, which is like the culmination of whatever things you do. So there's a great thing you can do to really build around those things.
It's interesting. I think we thought for a while, because there were so many streaming services and so many different platforms, that it was the era of the content creator. Is it still the era of the content creator versus those who deliver it?
Yes. I think that what has happened is now you look at things like YouTube, you look at things like microdramas, you look at podcasts and all the sorts of things. You have an ability now and different platforms to create an audience around something new. So we have a show that we're going to make the full series of. It is for young adults called Lost Links. It was on YouTube. The audience loved it. It was these little episodes, 1 and 5 minute episodes, but you have 2-3 million followers who are now clamoring to see a full series around such a concept. That's a de novo new thing that people want to see.
You are not based in Hollywood.
No.
You are based in Boston.
Yeah.
You're a Californian.
Yeah.
But you're in Boston.
Yeah.
Advantage, disadvantage? Well, doesn't matter?
I think, so first of all, because I work in the family office, I can exist. If I have a laptop and a cell phone, I can be anywhere and do a lot. And the stewards joke that I'm like Bosley. Sometimes I call in and make stuff happen. But being in Boston, we have a lot of GPs that we've invested in, and that it's a great market to be in. It's number one in healthcare and biotech.
You're talking about general partners?
Yeah.
Okay.
Yeah. So from our alternatives investments, that's a great place to be. You're close to New York.
What portion of the portfolio is media then?
So media, it's hard to quantify, but I would say it's under 10%.
Oh, interesting.
Yeah.
Okay.
We've made big bets, but
but they're relatively.
Well, when Worldwide is your core holding, I probably overstated the media play.
So Worldwide is still is held as part of the.
Well, it's a $20+ billion company.
But that's included in the family office assets.
Correct.
Okay.
Yes.
Great.
All right, we are at screen time. 20 seconds. So you're sitting down on the couch, had a long day. What do you watch?
Well,
quickly.
I like a lot of stuff, but I like, for example, Ted Lasso, The West Wing, to give a couple that are all-time favorites.
West Wing, an old series. My daughter just recently discovered it.
Everybody's rewatching it, too, and they have been for years.
I love it. Well, there's a lot of places to find all that stuff you used to watch. Edward, thank you so much. Really appreciate it.
Thanks for hosting. Thanks for having me.
Yeah, great to have you. Edward Hamadi, Chief Investment Officer of the Stewart Trust, President of Polarity, joining us here at Bloomberg Screen Time.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.